Hey everyone, before we dive in, here's something really cool. You're listening to an episode created almost entirely by AI. From the script to the voice, this is part of the AI Takeover series by Blockchain DXB, where we explore what's possible when humans hand over the mic to machines. There's little to no human involvement, and that's what makes this episode so powerful. Welcome to the future of content creation. Let's get into it. This episode is powered by MENA, the region's first and fastest-growing regulated all-in-one trading and investing app. Whether you're looking to invest in U.S. stocks like Apple or Tesla, or MENA giants like Adinoc or Salik, MENA puts the financial market at your fingertips. You also get access to gold, foreign exchange, ETFs, futures, and commodities. With over 375 assets to choose from, they've got the largest crypto selection in the region. And listen, guys, if you want to build long-term wealth without thinking about it every day and want to automate your investing, just set your monthly budget, choose your preferred categories, and let MENA do the rest. No fees, no lockups, and 100% customizable. Even better, funding your account is frictionless, and funding your account is easier than ever. You can fund your account with Apple Pay, Google Pay, credit cards, instant bank deposits, and even your crypto wallet. No friction, no hassle. And if you get stuck, MENA offers 24/6 real human customer support and personalized sales assistance. Because you're part of the Blockchain DXB community, you get an exclusive offer. Register with the code Blockchain DXB and make at least one trade to receive a $100 trading bonus credited to your account the following month. So what are you waiting for? Download the MENA app now. The link and code are in the show notes. Next up, Blockchain DXB is proud to be the official media partner for one of the biggest blockchain events of the year, the Blockchain Futurist Conference. For the first time ever, North America's leading crypto event is heading to the United States, taking place at the iconic Guitar Hotel at Hard Rock in Hollywood, Florida. Alongside it is ETH Women, happening simultaneously. Expect multi-stage panels, NFT galleries, DeFi showcases, tech demos, metaverse experiences, and more, all under one roof. It's where the smartest minds in blockchain, crypto, and AI will converge. Get 25% off tickets by using the code DXB25. And yes, I'll be there with exclusive live coverage, behind-the-scenes interviews, and spotlight features on groundbreaking projects. Mark your calendars, November 5th and 6th, 2025. Visit futuristconference.com and use code DXB25. Link is in the show notes. Next up, Blockchain DXB has two more interesting partnership news to announce. First up, with Future Blockchain Summit and FinTech Surge 2025. Blockchain DXB is an official media partner of Future Blockchain Summit and FinTech Surge 2025. Future Blockchain Summit is one of the biggest and oldest blockchain summit taking place in Dubai, going back to almost a decade, 2017 to be precise. The event takes place between October 12th to 15th at Dubai Harbor. This is where blockchain meets fintech to redefine the future of finance. 250 plus world-class speakers, 1,200 plus investors, live demos, product launches, and the exclusive invite-only GITEX Digital Assets Forum, all under one roof. From Web3 pioneers to fintech leaders shaping payments, banking, insurtech, AI, and DeFi, this event brings the entire ecosystem together. Startups, this is your launchpad. Get in front of top VCs, accelerators, and industry leaders. For blockchain and fintech companies, this is where connections turn into partnerships and dreams turn into exits. Register today at futureblockchainsummit.com. Don't just watch the future unfold, own your space in it. Remember, Future Blockchain Summit and FinTech Surge 2025. The registration link is in the show notes below, and see you at Dubai Harbor. Second partnership news kicking off from today is with the leading Bitcoin event organizers on this planet. And this year, Bitcoin Asia is taking things to another level. Bitcoin Asia are hosting a massive gathering this August in Hong Kong, and Blockchain DXB is proud to be an official media partner of Bitcoin Asia 2025. Taking place this August in Hong Kong, Bitcoin Asia is the region's premier Bitcoin gathering, where builders, investors, and innovators meet. It's really an honor for Blockchain DXB to be associated with Bitcoin Asia. Now at this event, expect powerful keynotes, bold conversations, and a headlining session with none other than Eric Trump. He will be sharing his vision for Bitcoin's long-term potential, its role in global finance, and Asia's massive impact on adoption, and a lot more. So listen up, guys. From infrastructure to regulation, privacy tools to lightning development, Bitcoin Asia connects global Bitcoin communities and drives innovation across cultures and markets. And as part of this partnership, you can register for the Bitcoin Asia using the code DXB. All the detail are in the show notes below. If Bitcoin's in your blood, this is your event. So, register today at asia.btc and don't forget to use code DXB for 10% off your tickets. Bitcoin Asia 2025, Hong Kong is calling. Be part of the future of Bitcoin. Next up, Advanced Media is the largest distributor of professional video, photography, cinema, and broadcast accessories in the Middle East. They represent over 100 major brands, including DJI, Hasselblad, Red, and Rode. The mic I'm using to record this? Sponsored by Advanced Media. But what really sets them apart is their commitment to purpose. People, planet, and prosperity. That's not just branding, it's their actual business model. They've partnered with SAE Institute in Dubai to offer scholarships to students pursuing a bachelor's degree in filmmaking, each worth AED 50,000. They also run regular workshops, training programs, and tech showcases across the region. For more info, visit amt.t, that's amt.tv. Finally, let's talk about something every crypto investor should take seriously: security. And that's where Ledger comes in. Ledger is one of the most trusted names in crypto security. Their hardware wallets, like the Nano S Plus and Nano X, keep your assets safe by storing your private keys offline. That means you're protected against hacks, malware, and phishing attempts that can compromise online wallets. The company is headquartered in Paris and is constantly innovating. Their team works with world-class security researchers and regularly tests their own products for vulnerabilities. It's why Ledger wallets are used by millions around the world. Using a hardware wallet isn't just smart, it's essential. If you're serious about crypto, it's time to stop relying on centralized exchanges or browser wallets. Click the link in the show notes to order your Ledger wallet and support this podcast at the same time.
Welcome to the Deep Dive, where we take a stack of sources and extract the most important nuggets of knowledge and insight, creating your shortcut to being well-informed. Today, we're tracking the digital ripple effects of, well, some pretty monumental global shifts. We're diving into a fascinating collection of recent news showing how global economic policies are dramatically influencing the world of digital assets. This deep dive is all about understanding those connections, between geopolitical shifts, market movements, and some groundbreaking developments in blockchain tech.
Exactly. And our source material for this deep dive, it gives us a snapshot from July 28, 2025. It reveals some really significant events that are already sending ripples through global finance and technology. Our mission is, like you said, to help you connect these dots from a major international trade deal all the way to specific crypto adoption news, and really see how they paint a picture of a rapidly evolving financial landscape. We'll explore market numbers, key initiatives, and how these high-level policies are truly shaping the future of digital assets.
Okay, let's kick things off then. A seismic piece of news broke just hours before our source was recorded. A significant trade deal signed by President Donald Trump with the European Union on July 27, 2025. And this isn't just some political headline, right? It have concrete economic implications.
Oh, it's definitely
reaching into some maybe unexpected corners of the market.
Right. And a critical detail from the agreement, straight out of our source, it reveals the European Union has committed to purchasing $750 billion worth of energy from the U.S. and investing an additional $600 billion in the U.S. economy.
Huge numbers.
Yeah, huge. And crucially, the deal outlines 0% tariffs on EU exports to the U.S. While the U.S. will apply a 15% tariff on agreed automobiles as well as other industries from the EU, the source also notes the EU will be buying defense sector goods, the specific amount to be announced soon. But it highlights this as bringing significant clarity for European companies.
Okay, and what really stands out, according to the source anyway, for economists in this agreement is how it claims this deal, particularly the use of tariffs, is like defying many traditional predictions. Instead of boosting inflation, it suggests inflation has actually been decreasing under the current administration, even with tariff data included.
Yeah, that's a bold claim in the source.
It is. The source portrays the U.S. economy as resilient and adaptable in this environment. Now, for listeners who might find that surprising, does the source offer any, deeper explanation or alternative takes on why this seems to be happening?
It doesn't really delve into alternative theories, no, but it consistently emphasizes one key factor. Supply chains are aggressively shifting back to the United States. It claims over $17 trillion in investment is now flowing into the U.S.
17 trillion.
Yeah, as companies prioritize building factories, production lines in America to avoid these tariffs, this includes really substantial commitments. The UAE at $1.4 trillion, Saudi Arabia at $600 billion.
Wow.
So this huge influx of capital is seen as creating historical opportunities, millions of jobs, and, aligning with an American-first economy idea by keeping capital inside the U.S.
Okay, so with these big macroeconomic forces moving, the natural question is, how does this actually, show up in the crypto markets? Our source draws a pretty fascinating direct line between these shifts in digital assets. What are the mechanics there?
Well, the source posits that a stronger U.S. economy, right, driven by more investment, robust GDP, it leads to greater liquidity, more confidence in U.S. markets overall.
Okay.
And this environment, it argues, encourages investment in risk-on assets, like Bitcoin, like other cryptocurrencies.
That makes sense.
And furthermore, the very tariffs pushing companies to set up shop in the U.S. that could actually boost demand for digital infrastructure, things like blockchain solutions, tokenized supply chains. It creates what the source calls natural use cases for crypto in, day-to-day purchases, potentially.
Interesting. And beyond the direct policy, there's another really critical event on the horizon mentioned. Federal Reserve Chair Jerome Powell's interest rate decision. That's July 30, 2025, just a few days after our source was recorded. Always a huge moment for markets, but maybe especially crypto lately.
Oh, absolutely. This decision, it certainly raises a big question for market participants. And the source lays out three potential scenarios. First, a reduction in rates. That's seen as highly bullish for crypto. It would enable more loans, encourage companies to invest in digital assets. And President Trump is noted as wanting this reduction.
Okay, bullish scenario one.
Scenario two, staying the same. This is still considered positive for crypto prices, and the source suggests there's a high chance of this happening, maybe for, political reasons.
Right. Keep things steady.
Exactly. And scenario three, an increase. This is deemed extremely unlikely given the strong U.S. economy, the job growth mentioned, but it would be the only scenario where crypto prices are expected to actually go down. The source also mentions Powell's reported satisfaction with the U.S. economy under the current administration, kind of adding weight to the unlikely increase idea.
Okay, fascinating dynamics there. Let's dive into the actual crypto market data then. What does it tell us? Our source gives a detailed snapshot, global crypto market, early hours of July 28, 2025, Dubai time. Give us the highlights.
Yeah, looking at the overall market, we're seeing some really robust activity. ETF inflows, for instance, currently at $583.6 million. And there's anticipation they could cross the $1 billion mark in Western countries soon.
Wow, billion-dollar inflow days, potentially.
Potentially. Total market cap is comfortably over $4 trillion now. That indicates pretty substantial growth since last year. And what's particularly striking is the surge in 24-hour trading volume. It's a robust $128 billion. Which, the source notes, is almost 4 times the levels we saw in 2023, 2024. Those were more like $30, $40 billion days.
That's a massive jump, not just a slight uptick.
No, it points to a dramatic increase in market engagement, definitely. Now, dominance-wise, Bitcoin's dominance has seen a significant dip to 60.30%, while Ethereum's dominance, interestingly, has been steadily increasing in the last couple of weeks. It's reached 11.80%.
ETH gaining ground.
Seems so. Bitcoin's 24-hour volume is $52.47 billion, with predictions it could double or triple that. And Ethereum's volume is $28.35 billion, with maybe a possibility of reaching $100 billion market caps. Bitcoin stands at $2.36 trillion. Ethereum has seen a substantial surge, now at $461 billion. Remember, it was below $300 billion just a few months back.
Huge pump on ETH then.
Yeah. Current price is Bitcoin at $118,920, Ethereum at $3,825. And interestingly, the source kind of attributes the lack of a strong immediate surge in Bitcoin price specifically to the weekend timing of that trade deal announcement. Maybe markets needed time to digest.
Right, maybe a Monday reaction expected. Okay. Stablecoins often called the backbone, right? Powering a lot of trading.
Yeah.
What's the activity there?
Yeah, good point. In terms of volume, Tether USDT and Circle USDC are neck and neck leading the pack, both at $9.78 billion. FTUSD follows at $4.59 billion. Now, when you look at market capitalization, USDT leads significantly at $164.43 billion. Though the source does note those, lingering questions about the audit for those funds.
We have the audit question with Taylor.
Oh, Circle USDC is second at $63.96 billion. Then you've got Athena at $7.29 billion, Sky Dollar, that's a rebranded MakerDAO token at $4.97 billion, and DAI, another MakerDAO token at $4.37 billion.
Okay. And what about DeFi? Decentralized finance and that growing world of real-world assets coming on-chain, RWAs?
Right. So the 24-hour volume for decentralized exchanges, DXs, hit $11.81 billion. Shows that continued shift towards on-chain trading. Total fees collected were $86.48 million. DX dominance has gone down slightly, though, to a 37.04%. Total value locked, TVL, across the whole DeFi ecosystem stands at a pretty healthy $42.44 billion. And the TVL connected specifically to real-world assets, RWA, that's at $12.18 billion. It showed a marginal decrease in the last 7 days, according to the source, after being pretty consistent for about 3 months prior.
Interesting little dip there. Any top DXs mentioned?
Yeah, top DXs by volume include PancakeSwap, Uniswap, Radium Fluid, and Orca, the usual suspects, mostly.
Okay, let's unpack some really fascinating real-world applications now. Milestones from the digital asset space. These stories really show how fast blockchain and crypto are getting integrated in different sectors, sometimes really unexpected ones.
Yeah, first up, we have a pretty remarkable initiative for military families. Giggle Academy, which was founded by Binance's CZ, has partnered with the American Legion. They've launched a $2 million blockchain scholarship fund specifically for U.S. military families.
That's significant.
It is. This program offers up to $20,000 for children of fallen or disabled service members, and it's for studying AI, blockchain tech, other real-world tech skills using Giggle's adaptive and gamified curriculum. It also includes this annual competition, challenging participants to identify what's broken and how will you fix it.
That's cool.
Yeah, highlighted as a brilliant example of corporate social responsibility and a big step for blockchain education.
Definitely. Now, here's one that's particularly fascinating, maybe for those watching the luxury market.
Yeah.
Christie's International Real Estate. They have launched a new dedicated crypto real estate division. I mean, who would have thought a few years back you'd be buying a multi-million-dollar house with Bitcoin?
Exactly. This new division will allow luxury homes to be bought entirely using digital currencies. As of the source's recording time, Christie's already had over $1 billion in property listings, accepting crypto.
$1 billion worth.
Yep, including places like, apparently, Laughing Buddha. The move aims to tap into that growing market of wealthy buyers seeking privacy, seeking innovation, especially, the source notes, as U.S. policies under the Trump administration are seen as increasingly embracing crypto.
Right, the regulatory environment potentially shifting.
Yeah, and Christie's has history here, right? They were pioneers, notably driving the NFT hype, selling Beeples Everydays for $69 million back in 2021.
Ah, yes, I remember that.
So this new real estate venture is seen as setting a precedent for trust, compliance, innovation. It signals to wealthy buyers, institutions, regulators that crypto is really maturing into a legit financial infrastructure.
Yeah, inspiring other sectors maybe.
Yeah.
Okay, our source also highlights a massive Bitcoin transaction, one that kind of surprisingly didn't trigger the price shock you might expect. It's quite something to see a $9.3 billion transaction have such a minimal impact, isn't it?
It absolutely is. A so-called Satoshi Bitcoin wallet sold 80,000 Bitcoin, valued at roughly $9.3 billion, sold through Galaxy Digital, one of the largest Bitcoin transactions ever recorded.
And these were old coins.
Very old. Dormant for 14 years, linked to the now-defunct MyBitcoin.com exchange. But despite this huge sale, the price of Bitcoin only marginally dropped, by like 1%. Holding steady around the $117,000 mark mentioned in the source.
Holding at 117K, yeah.
Right. Slight correction there for my earlier mention. Apologies. But the point is, it indicates an extremely strong underlying demand for Bitcoin.
Yeah, that resilience is key.
It really raises an interesting question, doesn't it? Is the market now just so mature, so liquid, that even these massive historical unlocks aren't a systemic risk anymore?
Good question.
The source also briefly mentions the upcoming Mt. Gox restructuring plan that's set for October 31st, 2025. And it kind of suggests its impact on price might not be that significant, given the stability we saw after this 80,000 BTC sale.
Interesting perspective. Okay, moving over to Dubai. The world of tokenization keeps expanding, a significant investment for a unique platform, really bringing that RWA on-chain idea to life.
Yeah, Toyow. Described as the world's first multi-category tokenized asset marketplace, based in Dubai, they've just secured a $10 million investment from Nimbus Capital to really drive global tokenization.
10 million, okay. What's their pipeline look like?
It's huge. Toyow apparently has over $38 billion in assets lined up for tokenization, and they've signed an MOU, a Memorandum of Understanding, to tokenize $500 million in real estate under management already.
Wow, so they're serious.
Very. Their mission is basically to democratize access to high-value, real-world assets. Things like real estate, art, films, music, commodities, bringing them on-chain through a regulated, user-first marketplace. So this investment will help them scale operations, get regulatory coverage in the UAE and Europe, expand their whole tokenization and trading infrastructure.
Big moves in Dubai. Okay, finally, let's look beyond specific crypto projects for a second. Consider the broader tech shifts that could impact, the future digital economy. And on that note, our source gives a pretty comprehensive look at Saudi Arabia's ambitious push into artificial intelligence.
Right. The Saudi Data for Artificial Intelligence Authority, SDAIA. It's spearheading Saudi Arabia's transformation and, importantly, ethical innovation in AI, positioning the kingdom as a catalyst for global benefit and national growth.
So what are they actually doing?
Well, SDAIA was established back in 2019. It aims to produce model solutions for complex development challenges across key sectors: economy, innovation, education, healthcare, cybersecurity. They promote best practices in data management, responsible AI use, guiding policies, guiding legislation, and get this, over 424,000 citizens are already registered to learn AI concepts.
424,000.
Yeah, moving towards a goal of 1 million people skilled up in AI, aligning with their Vision 2030 plan.
That's a massive national effort.
It really is. They've also developed comprehensive regulatory guidelines for responsible AI adoption, ethical principles, generative AI standards, the works. And there's a practical example. A cloud computing project has already delivered 49 services to 180 government agencies, integrating over 230 data centers. The expected financial impact, over $5 billion Saudi riyal. So it really showcases AI's tangible benefits for government efficiency, cost savings.
And you can see how building that strong AI and data foundation.
Exactly. It naturally creates fertile ground for advanced digital economies down the line, which could very well include, blockchain and tokenized assets playing a big role.
Fascinating stuff. Well, this deep dive has certainly covered a lot of ground, from, high-level international trade deals down to the granular details of market moves and these innovative blockchain applications. It really underscores how interconnected everything is becoming in the global economy.
It really does. And what's fascinating here is how these seemingly disparate pieces of info, a trade deal, Fed decisions, the crypto landscape, they're all kind of converging, reshaping traditional financial structures right before our eyes. And this, it raises an important question for you, the listener, to maybe think about. As digital assets become increasingly legitimate, increasingly adopted, driven by both market forces and national policies, how will this fundamentally alter the way we all perceive and engage with value in the coming years? What new opportunities or maybe challenges might arise as these trends accelerate? And that line between traditional finance and decentralized finance just keeps getting blurrier.